And thank you for watching Dollar Gains. This is Nathan. We're going to be looking at this stock, $2.30. We're going to be reviewing this, and this is a show that we're playing every Monday and Friday. Currently, we're going to be looking at dividend yield, income statement, balance sheet, and cash flow to check out this stock that a viewer wanted to review with us. So we're not going to be disclosing the stock, unfortunately, but looking at here, we've got the 5-year average at a little over 4.5%. Nice. Okay, cool. Decent ROI. Moving forward to the dividend yield for this year is 15%, which means in most cases, there's a lot of variances, but in most cases, this could mean that the stock will jump back up from where it's at 230, as I said, to equal out to being a 4.5-5% dividend yield over the last 5 years. So this is a good sign. We'll go ahead and see the other metrics to see what kind of sign we're looking at. Just looking right here, we've got the price to equity ratio at 5.23. That's a decent value for your dollar. The lower that number is, usually the better we're looking, but like I said, it's not the only metric. Gross profit 2014 through 2017. Okay, we see it high and then it dips and it's starting to come back up. That could be a good sign. What's going on with 2016? Moving down the line here, and okay, operating income and or loss, we're still showing a positive. Okay, all the way down here at net income after everything. Let's see, we've got um, a loss, and then we've got a massive increase in the green, and then we're going back into 2017 as a loss, and of course we're in the spring of 2018. So what's going on here? We've got discontinued operations, which means they probably could have sold something or had some event that allowed them to bring in a bunch of money really quick, but they're not going to be able to replicate that. It could be a factory, etc., etc. Since this is a communications um, type of stock, they could have been selling towers, getting out of a certain market, etc. Moving back up to balance sheet now. Let's check out how strong they are on balance. Okay, they got total current assets. It was high in 2014, jumped exponentially in 2015, and then leveled back out. What's going on? Why do we have such a high balance, such a nice amount of current assets here? Well, let's go ahead and just keep looking. Total assets now, 41 to 33 to 21 to 19. Okay, so their total assets are just dropping. That could be a bad sign. Let's go ahead and keep looking, try and get this full picture. We got total current liabilities at 10 to 21, so it jumped. Interesting. So we see the total current assets jump as well as we see the total current liabilities jump. They could have probably put a mortgage on and bought new towers or something, since, like I said, this is a communication uh, stock, which the industry in which you're investing in is extremely important to make sure you want to be in that industry. And then it drops back down, so at least it's mimicking the current assets. That's probably a good thing. You don't want a company to increase their current liabilities or even total liabilities without increasing their total assets as well. We got 41 to 37, 33, 29, 21, 15. So they're keeping their total assets above total liabilities, which I would recommend. Um, Granted, I don't own a business doing hundreds of millions, if not billions, but on a general rule of thumb. So let's go ahead and look. Net tangible assets. Okay, so they don't have any net tangible assets, but the stockholder equity is up, down, back up, and then started leveling down. Net tangible assets, they're probably somewhere in here where they have non-tangible assets. Um, yes, so it's probably brand, multiple companies, branding, probably. It could be, there's a few things that this could be. So that's probably where a lot of that net tangible assets is in a deficit, essentially. We'd have to look at the 10K form to fully get an understanding of what's going on with that. Let's just go ahead and move the cash flow because this is a real quick, short, easy. Okay, the cash flow in 2016 from selling or doing that one thing that's not reoccurring. Okay, yep, that's showing correct. Moving down the line, net cash flow. So we had cash flow. Even though we showed a deficit, we did have cash flow in 2014, 15 looking rough, 16 looking rough, and 17 looking rough. So where's all this cash flow going? What are we doing with this cash flow? Okay, so we've got right here total cash flow from operating 5212. Okay, that's all looking great. Okay, here we go. So right now we are looking at capital expenditures. So this could be improvements. These could be improvements to stuff possibly not reoccurring. We'd have to look at the 10K form exactly. Investing. Okay, so they've ramped up their investments that they've been purchasing. Okay, moving down here, dividends paid. Why did they just jump in their dividends rate? That could be alarming. They could be trying to plush the stock higher by doing that. Even though their income and their cash flow might not be supporting it, that might be another issue. We'll have to check out the 10K form. But as for right now, this is Dollar Gains, and I am Nathan, and we just ran through a few concerns we have and a few things we probably want to look into further, as well as what market is this stock in, what are their competitors. Their 10K form over the last 4 years would tell us this before really investing a substantial amount of an individual's net worth into it. So yes, this was Monday stock analyzation. Thank you very much for watching.